First of all, thank you, Adrian, for the opportunity to speak today. Now, I work in equity research at HSBC, and I cover the clean energy sector. So I'd like to present the view from the public equity markets. And so this is the supply side, the demand side market dynamics for providers of energy efficiency equipment and services. And I notice many of you in the audience are from companies that are industry participants. So my role, in effect, is to try to quantify the growth opportunity and effectively give investment recommendations based on that. So my question today really is how, or what is the opportunity for equity investors, and how do they view the energy efficiency sector? Now, going back to sexy, unsexy, I think certainly the theme is proving sexy. The energy efficiency, so these are indices, and you'll notice that the black line is the benchmark global index. Over the past 5 years, energy efficiency the grey line is the global index. The black line, energy efficiency and energy management, has broadly performed in line with the global index. And I would note that the so-called sexy solar and wind have actually performed very badly. This is because the actual margins of the producers of solar panels and wind turbines have been falling for quite some time, given overcapacity in the sectors. So from an investment point of view, I think the market understands the cost efficiency of energy efficiency, and the rising cost of energy is also a powerful long-term driver, I think, for sustained and most importantly for profitable, sustained growth of market participants. So my question, so what can we do to further entice equity investments into the space? I think one of the key challenges for the energy efficiency sector is building a credible market data. And in fact, the absence of consistent market data is hampering investment decisions, particularly in the arena of energy efficiency. Now, it lacks on one side the simple clarity of renewable energy. So you think of the modular nature of a solar panel or a wind farm. It's very easily communicated conceptually. Energy efficiency seems to have the opposite problem. So just taking an example from leading industry data provider, Bloomberg New Energy Finance, if you look at the volumes of wind and solar investments, again, this is across primary, secondary transaction into companies, into projects, what you see is that the amounts invested into wind and solar dwarf what has been invested into what they define energy smart technologies. Now, this comprises digital energy products, energy storage, energy efficiency, of which energy efficiency in buildings is a subset, as well as advanced transportation. And by their own admission, they do not include what I would say is probably the largest slice of the energy efficiency pie, is the actual project investment, installing insulation in buildings, replacing light bulbs, etc. As they see, this is almost impossible to measure. Now, therein lies the problem. So, I mean, this is not aimed as a shortcoming against Bloomberg Energy Finance, which I would say is arguably the most comprehensive database on new energy and clean technologies, but I would say it's a real need for the sector to quantify and to communicate the market opportunity. And I would say further work to define the market opportunity for energy efficiency in buildings will certainly help to stimulate equity investments into the area. So where can we start? I've chosen the European construction data to highlight the opportunity in fairly simplistic terms. This is an example of a consistent data set of renovation market volumes and new build market volumes across the whole supply chain. So this includes materials producers, suppliers and distributors of these materials, then services providers, ESCOs, installers and contractors. So again, the whole pie. And I think a few things jump out at me on this slide. Firstly, these are the top 5 European markets. Firstly, Germany. Renovation represents 70% of total construction turnover. and it is the highest in Europe. And particularly the residential sector is twice the size, the residential renovation sector is twice the size of any other residential renovation sector in terms of any other member state in terms of revenues. So obvious question is why? What has Germany done or has been doing, has provided to make that happen? And I would say three basic conditions. One obviously is stable economic conditions. But secondly, and specifically on the subsidy side, we've had both generous grants and cheap loans. And I would argue that certainly these have helped the residential sector to really become so much larger than anywhere else in Europe. So I would also contrast that with the UK, for example. Renovation is only 38% of total turnover. Again, these are, let's say, data that can be discussed. You need to put this data into 5-year trends, understand how new build has developed. But I think as a snapshot, it shows you the actual difference across individual member states and can help us draw lessons. So in the UK, there's a lot of talk at the moment about the Green Deal. We're seeing that the transition to an open market mechanism from a regulated and target-driven stimulus programs, which are due to expire at the end of this year, is looking slow. And in fact, the government's own impact assessment suggests that the installation industry will fall off a cliff in 2013. In fact, this week, the Insulation Industry Forum has warned the UK government in an open letter that 16,000 jobs are at risk if delays to implementing the Green Deal are not resolved quickly. So I think two different examples of how the renovation market has been stimulated. So I guess as a provocation, if we were to take the same market proportion of renovation versus new build in Germany and apply it across the top 5 EU markets, that alone is an incremental 286 billion of turnover. And so just to conclude, I think as an investment theme, energy efficiency remains resilient. Secondly, sizing the market opportunity is important in attracting more equity investor participation. And thirdly, the German renovation market can be seen as a model for others to follow. Thank you.